Have you ever been stressed about that looming credit card bill, only to open your online banking and see a mysterious dip in your credit score? Panic can set in fast, leaving you wondering what went wrong. Maybe it was that latte you splurged on, or perhaps that forgotten gym membership finally caught up to you. But what if the culprit was something a little closer to home, something you use to monitor your credit health, Credit Karma? Fear not, credit score warriors. Today, we're tackling the myth that using Credit Karma hurts your credit score. We'll break down the difference between soft and hard inquiries, how Credit Karma works, and some bonus tips for keeping your credit score in tip-top shape. So, settle in, hit that subscribe button, and let's get schooled on credit. First things first, credit scores. This magic number is a lender's way of gauging your trustworthiness when it comes to borrowing money. It's based on your credit history, which includes things like your payment history, credit utilization ratio, how much credit you're using compared to your limit, and the length of your credit history. The higher your score, the better your chances of getting approved for loans and credit cards, often with more favorable interest rates. Now, here's where Credit Karma comes in. It's a free service that allows you to check your credit score regularly. This transparency is a powerful tool, letting you stay on top of your credit health and identify any potential issues before they snowball. But the key question remains, does checking your credit score with Credit Karma actually lower your score? Absolutely not. The reason boils down to a concept called inquiries. There are two types, soft inquiries and hard inquiries. Soft inquiries, like the ones Credit Karma performs, have zero impact on your credit score. They're simply a way for you to access your own credit information. Think of it like checking your bank statement. It doesn't affect the money in your account, it just lets you see what's going on. Hard inquiries, on the other hand, are triggered when you apply for a new line of credit, such as a loan or a credit card. These inquiries can cause a temporary dip in your score, usually around a few points. However, multiple hard inquiries within a short period can have a more significant impact. So, how does Credit Karma keep your inquiries squeaky clean? The service uses a soft inquiry to access a version of your credit report specifically designed for monitoring purposes. This way, you can check your score as often as you like without any negative consequences. Now that we've debunked the Credit Karma myth, let's explore some ways to keep your credit score healthy. Pay your bills on time. This is the golden rule of credit. Consistent on-time payments significantly improve your credit score. Keep your credit utilization ratio low. Aim to use less than 30% of your available credit limit. This shows lenders you're responsible and not living paycheck to paycheck. Don't apply for too much credit at once. Remember those hard inquiries? Applying for multiple lines of credit in a short time frame can raise red flags for lenders. Dispute any errors on your credit report. Mistakes happen, and sometimes those mistakes can hurt your score. Regularly review your credit report for any inaccuracies and dispute them immediately. By following these tips and utilizing Credit Karma for smart monitoring, you'll be well on your way to credit score mastery. Remember, knowledge is power, and in the world of credit, Credit Karma is your free financial superpower. With that said, thanks for watching, and until next time, stay informed and keep your credit score soaring.